You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again. It is Thursday. It is 1:30 p.m. Central, 2:30 p.m. Eastern. Do you know what's cooking in the world of futures options? Let's find out together, shall we? It is time once again for TWIFO, This Week in Futures Options. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which all of you folks are binging these days. If you're listening to TWIFO, you're not listening to our newest addition to the network, the Futures Rundown. What are you doing? Just popped off yesterday, every Wednesday on the network. Of course, if you subscribe to the full network, you already know that. It's coming in your feed right now as we speak, so you have no excuse. If you're listening to TWIFO, get the full network. You'll be able to get the Futures Rundown, very much a sister program to this one. And, of course, nearly a dozen other programs coming at you over there. And, of course, if you want to go above and beyond, you can handle even more options content in your life, including options oddities, pro Q&As, early access to fun things, live streams. TheOptionsInsider.com/pro is the place to go to get your hands on that. As we go around the horn and see who's joining us on the old CME Group Hot Seat today, I'm pleased to welcome back our old friend, Mr. Uncle Mike Tosaw from St. Charles Wealth Management. Uncle Mike, welcome back to the show, sir.
It is always a pleasure.
Glad you're having fun, listeners. Let's see if we can keep the fun rolling as we head on into the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show we break down everything lighting it up to the light side over there at CME Group and to the dark side since our last episode last Thursday. Looking at the broad chart right now, we are biased to the green. Excuse me, listeners, still you're covering a bit from whatever I picked up down there at STA. Probably be a few of those cough pauses here on the show, but I digress. Looks like we're hanging out roughly, I'd say 65-35 green over red, maybe 70-30 green over red. Either way, we are biased to the green this week, but it's not all green all the time. We could certainly make a bottom 5 and indeed a bottom 10 or more out there. Now, Uncle Mike, the last time we had you on the show, we had some challenges getting you in on the movers and shakers. You think you could tackle it this week? Think you can handle a little light side and dark side this week, sir?
I will do my best. So we have the 3M SOFR up 15.84% on the week. We have copper. Now, copper is not as shiny as silver, which I'm sure we're going to be talking about today. That is up 6.8% on the week. We have bean oil. Up 5.8% on the week. We have natural gas up 5% on the week. And then, of course, the Nikkei/yen up 4.46% on the week. Some thoughts on that. I think that it's interesting that natural gas is on the light side when 5% really isn't a lot of times that big of a move for natural gas. That's the first thing that I'm seeing on that. But let's talk about the dark side. We have WTI. Now, do I have to talk in my evil villain voice now that I'm on the dark side? We have WTI, the slippery stuff, down 5.26% on the week. RBOB, who is Bob and why does he have gas? That's the question that I always ask. Down 4.7% on the week. We have Brent down 4.2% on the week. Of course, palladium down 4% on the week. And then our old favorite, rough rice, down 3% on the week. So we have a lot going on here. And one of the things that I'm noticing is that on the dark side, a lot of it's 3 of the 5 are related to energy. But the irony in all of this is that we have natural gas up 5% on the week. Mark, what kind of a conundrum is this that we're looking at here in the futures world?
Nat gas just moves to the beat of its own drum out there, sir. Yes, well done. I like how you and just about everybody else, they all start from the top. They start from number 1. So they don't like to build to number 1. You start right for the jugular. So it's okay. But everyone likes to do it their own way. And I've seen a lot of our guests on the show like to go straight to number 1. So no building of tension, no building of curiosity, right for the top spot. I get it, Uncle Mike. You are far from alone in that case, but well done.
So is that the passive-aggressive way of you telling me you don't like the way that I did it, Mark?
I'm just saying it's an intriguing choice. You know, you're trying to...
It's an intriguing choice.
You're trying to build tension.
Like that.
You're trying to sell the audience on it. It's funny because you are far from alone. Almost all of our guests, when they do it, they go the exact same way. So maybe it's just people can't resist reading things in order. I don't know what it is. It's a bit of a human nature thing. But it is kind of funny to see how everyone does it. And you are definitely amongst the crowd that likes to go to the upside, sir. So interesting stuff there.
Good to know.
You are far from alone as we keep on rolling out to the land of CVOL movers and shakers for this week. Remember, you can find this for yourselves. Just type CME and CVOL into whatever browser you're rocking there, listeners. That'll get you to the dashboard. Once you're there, go to the high-low range, set it for 1 week. Then you want to do a grouped list, and that will get you to where we are right now. Coming in at the top of our list this week. Remember, they sort it by today's change. So today we have the metals CVOL coming at the top of the list, 19.64, up about 1/3 of a point today. And again, it's an interesting week on the CVOL front. We have roughly half of our list pinning the needle to the upside, and the other half kind of to the downside with one kind of in the middle there. We'll get to that in a second. But the metal CVOL is one of those, pinning the needle to the upside right now. The low was 1790, so we've seen quite an increase in metals vol over the course of the past week. Below it, we have the FX CVOL 788, up about 1/4 of a point. That's a decent move in FX as well, and also pinning the needle to the upside right now. The low was 7.32 earlier this week. Below it, we have the commodities CVOL 31.76, up about 0.14, so kind of unched on the day. But on the week, pinning the needle right now, the low was 30.38, so a lot of increase in vol on the commodities side as well. And keeping on rolling, we go on out to the ag products next. It's 19.09 on the aggregate ags CVOL, so that one 5 times fast. Pretty much unched on the day. The low was 1843 earlier this week, and we're at the high for the week right now. Below it, we have the energy aggregate CVOL, 47.25, off about 0.05 today. On the week, this is one of the ones that's kind of hanging out in the middle of its range. Its high was 47.92, and the low was 46.31. So kind of hanging out in the middle of that range right now. Then below it, we have the Treasury complex. First, we have the price vol, 5.62, off about 0.11 today. And burying the needle to the dark side for the week, the high was 5.98, 1/3 of a point when you're starting at about roughly 6-point level. It's a decent move. And then below it, we have the Treasury yield vol at 105 and a quarter, off nearly 3 points today, and also pinning the needle to the dark side for the week. The high was 113.32 set last week. So kind of splitting the needle this week on the CVOL. Half of our names going to the upside, half of our names going to the dark side. But since Uncle Mike is joining us and he is a fan of the shiny stuff, I think we'll start out in the metals first.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, everybody, welcome to the world of the metals. You know where to go to find this. Go to cmegroup.com/TWIFO. If you haven't done so, they will ask you to set up a free account. It takes a couple of minutes, then you're off to the races. And then once you're there, go into that drop down, go down in the asset classes, almost to the bottom of the list to metals. And then at the top, you have product family, precious. And we're going to go down one slot from gold into silver. You'll see it's at about 32, almost 32 and a half, about 32.44 coming into the start of the show. Up nearly a full point just since Monday, so up nearly 3%. And it's been on quite the good run for a while as well. In fact, just yesterday, it hit the highest level since 2012 out there in Silverland. So it's been a good run out there in Silverland, up about 37% for the year. Now, no surprise, gold and silver have both done pretty well this year and have continued that rally post-Fed, as the shiny stuff seems to be one of the bastions people are going to in this aggressive rate cut world. We also see some more demand coming out of China out there. That's also lifting all things silver. So, Mr. Uncle Mike, we've been talking silver, seems like for a while this year. And once again, silver doing pretty well. What's catching your eye out there in the number 2 in the shiny stuff department?
Well, I mean, with silver, yes, it is at the highs since 2012, but we also made a run back in May to similar levels. And so just with and even on SLV, it actually was still the all-time, or we were higher in May, not by much, but just a little bit in SLV. And I know we're focusing on the futures contracts here, but where I'm going with this is that we had the run in May, and then it looked like then we dropped a little bit, and then we had the other run again in July. Then we dropped quite a bit. And then now, since early August, over the course of the last almost 2 months now, we have had a 20% gain in silver. So it has kind of been channeling a little bit. The lows with which it was at in early August are similar to the highs, or similar levels to the highs with which they reached in March of 22, in April of 22. We were at these same highs multiple times in 22, a few times in 23, and then resistance has kind of become support with it. And then it looks to me from a technical standpoint that silver is starting to form kind of a wider channel. But being the silver bull with which I am, my hope is that we can break out of this, because we're very near these highs right now. And I'd like to see it break out a little bit further to where we can have just $1 or so. I mean, come on, silver, you can do that. What's that between friends? Just another 2 or 3% move, and we'll be broken out to a pretty nice level with the shiny stuff. And silver is unique in that it'll bore you to death for years and years and years and years, as our option block listeners know from Mark Longo's lamenting about me not giving the silver content that I had hoped to, because it didn't move like I had hoped it would. But all of a sudden, silver just comes like a thief in the night every 10 years or so, and the thief might be coming. We will see.
Yes, the heady days when you promised so much action on that multi-year silver collar, and then we kind of just snoozed through the whole thing. Now, if we had it on today, it'd be a different story, listeners, because silver is delivering this week on the underlying movement front and on the volume front as well. Nearly 90,000 contracts on the tape already in silver this week, so a pretty active week. And of that, about 34% going up. And the D's contract has about exactly 60 days to go. We're going to hang out there, listeners, What is the vol in D silver? 35 and a third, up about 4.5 points. So that's decently volatile for silver, all things considered out there, listeners. And then skew-wise, the puts last week, 4.8% cheap. This week, even cheaper, 5.8% cheap. So nobody wants the puts. Everybody wants the calls. That's kind of the way things tend to go in precious metals. 7.3% bid were the calls last week. 8.4% bid were the calls this week. So the calls ticking up. Interestingly enough, the big dog out here this week was the 32 calls. 2,500, almost 2,600 of those going up, including 2,100 on Tuesday. Looks like folks were bailing on those, which again makes sense as you blow through that 32 strike. We're right around 32.5 right now. People are going to take off some of those calls out there. And that seems like that's pretty much what we had going on out here. Number two, we have kind of a tie for number two, actually. About 1,800 each between the 36 calls. So 36s, that's kind of interesting. Going up about 1,800 times this week. The big day was Tuesday. About 1,200 going up on Tuesday. 300 today. About 200 and 300 on Monday as well, roughly. So, yeah, 36 calls in December. That's interesting. Again, not that far out of the money, but decently. Looks like they were mostly closing on Tuesday as well, so maybe somebody getting the heck out of Dodge on a 32, 36 vertical. Either way, a lot of closing paper on 32s and 36s on Tuesday. And right behind it, we have about 1,800 as well of the 28 puts going up pretty steadily throughout the week. 800 on Monday, mostly opening there. 700 or so on Tuesday, 300 on Wednesday, closing both of those days, and then a handful today. So a total of 800 on the week. 28 puts, 36 calls. Interesting. Maybe a bit of a risk reversal going on out there. Sell the put to finance, buy in some more calls. That would seem to be, if past is prologue, folks like to take advantage of that upside out there in the metals. And you know what? If 36 calls too far out there for you, how about the 34s coming in at number three, about 1,700 of those. The big day for those also Tuesday, about 1,000 going up on Tuesday, mostly closing there as well. So a lot of closing paper on the 32s, 36s, and 34s on Tuesday. 500 today against an OI of 2,600, and not much the rest of the week. So interesting little bucket of out-of-the-money calls going up here in December, which again is par for the course. Also, if you go out to January, we had some folks like in the 39 calls. Looks like picking up about 1,400. Looks like actually it was a 37, 39 vertical that went up about 1,400 times in January, listeners, on Tuesday. Tuesday was the hot day for the metals and for silver in particular. It seemed like all the paper went up there on Tuesday. Uncle Mike, I don't know, you like that one? January 37, 39 vertical. You a fan of that one?
I'm not a non-fan. I memean, if you want to take a shot, I would view that as a good way of taking a shot, if that makes any sense. From a 10,000-foot view, I really like the idea of selling something higher than you're buying, just because of the reverse skew that exists. Now, what the skew is on it, I'm not familiar with it intimately, but I think if you're going to take a shot in a precious metal, I really like that one because you got some time, and if it gets there, obviously it's going to pay pretty handsomely. But if it doesn't, you're mitigating the risk with typically, once again, I can't comment on the skew that may or may not exist in this one, but what's typically pretty beneficial. So I actually like that one if you're looking to take a shot.
I like that. I'm not a non-fan. That's damning it with faint praise, but it sounds like you like that one out there. You also like some other shiny stuff as well, including gold. Gold on a good run as well. Hit a new all-time high yesterday, 26.85. Might have gotten, let's see, we got above that today, 26.98 now. So, yeah, new all-time highs pretty much all the time here in gold, certainly in the last couple of weeks post-Fed. Folks flocking to the king of the shiny stuff. Up right now about 2% since Monday in that front future, right around 2,700 listeners, 26.98 as we're kicking off this segment. Also some impressive paper out here. Usually for gold, you might see 200, 250,000 contracts on the tape. 420 right now, so an action-packed week out here in the king of the shiny stuff. And of that, exactly 33% going up. Where else but in December? December is the king for the shiny stuff this week. Let's see, the vol in December gold, almost to 17, 1688, up about 1.2 points. That's not bad. It's not explosive. but it's not bad for gold. We've obviously seen it get much lower. In terms of skew, you're going to be bid to the upside. The question is how much. Last week, the puts 1.6% cheap. This week, getting cheaper, 3.1% cheap. And the calls, 4.6% bid last week. This week, 6.2% bid. But Mr. Uncle Mike, before I break down some of this flow, I know you like silver, but how much attention do you pay to the king of the shiny stuff, which is gold, sir?
Solid gold, baby. I definitely keep an eye on it. What's interesting about gold is that up until December, I would say, of this past year, we've been there before, kind of, sort of. If you go back to, the early days of the option block, our other show on here, we see gold at levels of all-time highs. Then gold kind of puttered around a little bit for roughly 9 years. Then it started going up to those levels again in August of 2020, goes down a little bit. Then we have March of 2022, then May of 23, putters around a little bit more. And then the breakout actually happened right around December of last year. And that's when gold has really started running. So gold has had quite the run this year and continues to make all-time highs. And not concerns me, but it just kind of, silver is so coiled right now, I believe, because it has not been making new all-time highs. And it makes me think that silver is really a good spot to be right now because it has not really caught up to gold yet and has had its freakish run like it oftentimes does.
All right, let's check out what's cooking out here in gold this week. Like we said, a pretty hot week, 420,000 contracts on the tape. Exactly a third, 33% going up in the D's contract. And looks like the big dog was the 25 half calls. So I said we're at about 2,700 right now in the D's future. And 25 half, so in the money calls. That's interesting. Going up 14,000 times this week. 5,200 on Monday, 5,500 Tuesday, 3,500 yesterday. A whopping goose egg today, so it's kind of weird. Opening all week long, so somebody opening for size on in the money calls in December. You don't see that too often. That's kind of interesting. Worth noting, right behind it, we have about 12,500 of the 2,300s. It's like a lot of that paper was closing, including 2 blocks of 5,000 on Monday and Tuesday, so could have been a roll-up. If they were rolling, though, that's interesting. They roll from the 2,300s to the 25 halves. You're still going to roll to an in-the-money option. That's interesting, an interesting choice if that is the case, but we've seen crazier things, and then 2,500, the 2,300s trading on Wednesday as well. Looks like mostly opening there. So, yeah, weird paper. And it lines up pretty precisely because a goose egg for pretty much both of them on today. So no action today. So it does seem like it's related paper. And we got some vertical action going up. Would you roll, listeners, if that was the case, if you had 2,300s on? Would you roll to a handle that is still roughly 150 points in the money? It's an interesting choice. We usually see a lot more out of the money playing in gold. And that would come in at our number 3 spot here with the 2,700s. Those are technically pretty much at the money now even. Those going up 1,500 times on Monday, 6,300 times on Tuesday, mostly closing there. So once you get to the strike, some folks taking them off makes some sense. And about 1,000 each yesterday and today. Remaining OI on the strike about 11,000. Let's keep scrolling, see if we see any other weird and or aberrant paper. How about 27 halves? So before we get there are some puts lighting up this week as well, including the 2,500s in December going up 7,700 times this week. The big day was Tuesday, about 2,700. So somebody bailing on them there. 2,400 today against an OI, a remnant OI of 6,400. So not a ton of 2,500 puts left, apparently. 1,800 going up on Wednesday, mostly opening there, and a little bit less than 1,000 on Monday, slightly closing there. So back and forth on the 2,500 puts. And then right behind it, we have more upside. We have the November 27 halves. November 27 halves going up 7,300 times this week. Looks like closing across the board. So somebody was bailing on those as well. 2,600 times on Tuesday, 2,300 times today against an OI that remains of about 4,600. So it's like taking off roughly half of the OI today. 1,200 on Wednesday, 1,100 on Monday. So again, folks bailing, it seems like, on some of their upside and then rolling to some other strikes. There's always a couple of funky ones out here, listeners. Let's see if we can find them. Here we go. Here's our resident funky one for the week, Mr. Uncle Mike. Tell me if you like this one. Looks like we've got the 3300s and the 30 halves in June of next year. Looks like it's a vertical, the 30 half, 3300 vertical, going up 5,000 times on Tuesday. Again, Tuesday was just the banger day for crazy metals volume. That's interesting. Uncle Mike, next June, 30 half, 3300 vertical in June. Are you a buyer or a seller?
I'm not a non-fan. No, I think it's one where it's kind of similar to the silver trade in that if you are a buyer and you want to take a shot, you can do it. That one, though, I don't know, just because gold has had the run with which it has, you got to be quite the gold bug to want to do that, to have the run continue like it has. And the thing that makes me think about, though, is I say you have to be quite a gold bug to buy that. Well, there's a lot of gold bugs out there, and that's typically how they trade. So I can't say I'm surprised by it. If I had a gun to my head, I probably would be a buyer of it, but I would not be an enthusiastic buyer of it.
He is not a non-fan, but he's also not a fan, listeners. He's kind of in the middle on that one out there. Since we're hanging out in the metals, let's do a quick stop into the base metals as well, because copper was number 2 to our light side, up nearly 7% this week, 6.8%. So a good week out there on the copper side as well. Now, for a long time, copper has been just kind of a byword for Chinese industrial demand, but it seems like China on the upswing, at least. A lot of Chinese-related names in our top 10 on the option block today as well, all of them rallying, so it seems like we're in the on-again mode for China, at least for today. Copper right now, $4.65 in that front future, up about 30 cents or nearly 7%. So it looks like pretty much all that move coming this week, listeners, not even since our end of our show last week. So a good week out here in copper. Also pretty action-packed, not that dissimilar from silver in terms of volume. It wasn't that long ago, copper really didn't do much from an options perspective. Now threatening silver, about 80,000 contracts on the tape. So pretty active contract. And of that, about 44% going up in the November contract that has about 32 days to go. We're going to hang out there. The vol, you might be asking, in November silver, what is it? 25 and a quarter, listeners. Up about 4 and a quarter right now. So getting juicier, getting frothier out there in copper, which is interesting. The puts last week, 6.5% discounted. This week, flat. Literally flat. No bid, no offer. That's kind of interesting. The calls last week, 7.8% bid. This week, 2.1% bid. So the calls have come crashing back down to earth from a skew and a vol perspective. That is kind of fascinating. They were pricing in a lot of juice last week. This week, most of that is gone. And maybe let's see what's going on. Looks like it's the 5 calls out here in November that were leading the dance, going up 4,300 times this week. Pretty much 1,700 today against an OI of 5,400. 1,500 yesterday, looks like mostly closing, and 1,100 on Tuesday, actually slightly opening. So back and forth on the 5 strikes. I said we're at about a 465 in that November future, listeners. So slightly out of the money calls. Back and forth pretty much all week long. Right behind it, the 4 halves, pretty much the now in the money strike, going up about 4,200 times. But they don't line up at all. 3,500 of them going up on Tuesday, mostly closing there. And then about 700 on Wednesday, mostly closing, and a couple of hundred the rest of the week. So it looks like all of the 4 halves went up on Tuesday. It wasn't evenly spread out like the 5s, which you would expect if there was some vertical action. Looks like somebody traded 1,100 of the quarter puts. The 0.25 puts also in November, listeners. I don't know what price they traded those for, but that was opening. So somebody buying the quarter puts in copper when the underlying's at 465, that would be an interesting trade out there. 5 calls seems to be where the action is. Also 5 calls in December, as you would expect, going up about 4,000 times this week. So 5 strike seems to be where the action is out here in copper this week. Mr. Uncle Mike, sir, do you pay any attention to the base metals such as copper, sir?
I mean, I typically don't. I like to keep informed on them and watch them, but for the most part, I stay in the shiny stuff with it. So, but this is always fascinating to listen to, no doubt about it.
So just to clarify, he is a non-fan of copper, listeners. All right, let's...
I'm not a non-fan of copper.
Not a fan of copper. Looking right now, looks like the 3,000 lot of the D's 5s, they actually went up as part of a vertical. The 4 3/4, 5 vertical going up 3,000 times, opening on both legs, so it wasn't a roll. It's a pretty tight vertical, but we've seen weirder stuff out here in the metals, listeners. You like that? 4 3/4, 5. We've seen a quarter point vertical. Doesn't get me that excited, but maybe it got somebody else excited. Speaking of things that get us excited, Mr. Uncle Mike, we've touched on a lot of metals. What else is getting you excited today you want to talk about?
Well, I mean, can we talk about the 10-year? We got to talk about the 10-year with the Fed because, I mean, you have dinner conversation to deal with at home.
All right, to the land of the rates we go.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, listeners, to the 10-year we go into that drop down, pop out of metals, go up one slot, so it's pretty easy to find, to the interest rates asset class, then the product family US rates. Then product, you're going to go down a ways. You're going to go down 6 slots to the 10-year. Once you do that, you'll see that that 10-year future at a 114.12, off about 0.15 this week, so off about 0.4%. So not a huge banger move this week on the 10-year. A decent volume, not explosive though, about 2.28 million contracts. Again, that's a lot of paper, but we've seen it do much more than that. Looks like about a third of that paper going up in the November contract that has about 29 days to go. And the vol out here in November, 10-year, 5.5, a whopping 5.5, listeners. Mr. Uncle Mike, sir, what's catching your eye in the boat that you are riding along with the 10-year note?
Well, a few things. I mean, with the Fed actually doing what they were doing, and I was actually surprised that they went 50 basis points when they did. So I thought they were going to go 25, and then a lot of people were saying, oh, they're changing it to 50. I know we talked about that in the option block a little bit, but I figured they would just go with 25 and try and do things a little bit more gradually. But I was surprised, to say the least. Not too surprised, but slightly surprised. I was not non-surprised, if that makes any sense, which it doesn't, I know. But we kind of, in the 10-year note, probably about 2 weeks ago, we've peaked out in terms of the pricing, but we've pulled back a little bit, but nothing too much. I think that where we are right now is, from a technical standpoint, we're at support levels that we've kind of seen since August. And so we broke up to the levels with which we are in early August. And then in July, we were rallying a little bit. But for us to go back down to the levels that we were back in July, I really don't see that happening at this point, just because of the fact that rates are lower now. But the rally with which we have had since July, in my opinion, is greater than what the rate cut or the anticipation of the rate cut would justify. So one of two things is going to happen, in my opinion. Either we are going to get a little bit of a pullback in the pricing of the 10-year note, or we are going to be getting more rate cuts. Not necessarily, I doubt it's going to happen in the fall, but you never know, it could. Maybe it will, who knows? But over the course of 2025, it appears to me that the bonds are in anticipation of more rate cuts coming in 2025. We're going to have a new president, whatever way you look at it, so who knows? But this is definitely something that needs to continue to be monitored regardless of your trading underlyings, in my opinion.
Let's see what's lighting it up out here in the 10-year. Like we said, a decently active week. The big dog, actually, this is kind of reminiscent of an equity. The big dog are the 114 puts, so they're pretty much at the money puts going out tomorrow. 1 day to go, 140,000 of these bad boys going up this week. That gives you a sense of how much paper goes up here in the 10-year, listeners. That 114 put expiring tomorrow, doing more paper than silver and more paper than copper, and almost as much as the two of them combined. So that's a heck of a lot of paper here, listeners. The big day was Tuesday, 49,000 on Tuesday, slightly closing there. 39,000 on Wednesday, 33,000 on Monday. Again, opening on both of those. A mere 18,000 today against an OI of 34,000. So that was definitely the hot strike. That's pretty much 2x what our next closest one is, which is at 114 quarter puts. going up about 80,000 times this week, 79,000 to be precise. That was, the big day was today, actually, 25,000 today against an OI of 27,000. So these have a day to go too. Maybe they're getting the heck out of Dodge on the rest of the OI. That would certainly make some sense. 23,000 on Tuesday, 16,000 on Monday, 14,000 on Wednesday. Opening all week long on these bad boys. So interesting paper. Everyone's getting near dated, listeners. Even in the 10-year. Paper going away tomorrow. And then behind that, if we go out to November. So it's not all expiring tomorrow, listeners. It's just mostly expiring tomorrow. If we go out to November, it was the 113 half puts coming in at number 3 pretty much, doing about 70,000 contracts this week. The big day was Monday, 41,000 on Monday, 15,000 on Tuesday, opening both days there. About 6,000 on Wednesday and 7,400 today against an OI of 74,000. So pretty much exactly 1/10 of the OI going up today out there in the 10-year puts. I'm going to scroll around to see if you see any other interesting and or aberrant prints out here, listeners. 112 puts going up 33,000 times. I mean, so much paper. It's kind of like looking through the hurricane to try to find the individual droplets that catch your eye out here, listeners. 115 halves going up, expiring in 6 days, 24,000 of those bad boys. I mean, man, we could do an entire show on just the myriad of paper that goes up out here on a pretty much daily basis in the 10-year. But Uncle Mike, we are coming up against it, so we got time for one more product. What do you think we should wrap up with this week, sir?
Well, why not? Let's go with the thing that's making new all-time highs. Let's go with the S&P 5. Let's go with the S&P E-mini.
All right, to the world of equities we go, listeners.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, listeners, to the E-mini we go. Pop out of the rates. You're going to go up 2 slots to equity indexes. Then product family, U.S. index E-mini. Then product S&P 500 E-mini right at the top of the list there. So very easy to find. Is it an action-packed week out there in the E-mini? Yeah, it's pretty action-packed. About 3 million contracts on the tape. So outperforming the 10-year out here this week by a sizable margin. But Uncle Mike, I know you like yourself a little bit of equities. What's catching your eye out here in the E-mini this week?
Well, I mean, I think that, number one, we have new all-time highs today. So that's something that's always very exciting. Number two, we still continue to go up. And there's really, you wonder how long or how this can continue to be sustainable in the S&P 500. We've had just a huge rally. I'm just looking back from, and I know this was part of where it went down, of course, but in October of 2022, over the course of the last 2 years, we are up very significantly in the S&P 500, going from a low in the mid 3,000s to where we are now in the upper 5,000s. That's a big deal. And so when you have something like that moving, something that big moving like that, that's definitely something that is catching my eye. The other thing that's catching my eye is that when we did have our quote unquote mini scare on August 5th, when we had 4% down, we were 4% down pre-market, but then we had the VIX over 60. We just recovered from that really quick. We had a little bit of a pullback again in about 2 or 3 weeks ago, but every time this market has pulled back, we have come to rally from it and rally pretty hardcore. So what's catching my eye, it's I kind of feel like I'm at the movie theater sitting in the front row just looking straight up whenever I look at a chart of the S&P.
He is not a non-fan of the S&P, to keep our double negative theme going from throughout the show here, listeners. I'm just looking here as we're talking. Again, 3 million contracts. Spoiler alert, we're not going to analyze all 3 million here on the show. I need to do some filtering here when we talk about the E-mini, because so much of this paper is still in that nonsense category. Like 100,000 of the 47 half puts expiring tomorrow going up this week. 30,000, 48 half puts. 42,000, 47 half puts. So 35,000 of 47 half puts in 5 days. You know, it's a lot of still of this picking up nickels, or not even nickels at this point, pennies in front of the steamroller hundreds of thousands of times. So you've got to filter out some of that noise to get to the signal. Once you get to the signal, you see that a lot of it still is, as you would expect, this very near dated flow, like the 5700s going out in one day do seem to be the most active contract beyond the, as I would term it, the nonsense puts out there. Going up about 37,000 times this week. Almost all of that, 28,000 today. So interesting. 5,700 puts opening today, obviously, because there's only 5,400 open coming into today. So 28,000 going up today. Are people betting we're going to blow through 5,700 by tomorrow? I don't know. Uncle Mike, 5,700 puts with 1 day to go. Are you a buyer or a seller of those bad boys, sir?
I would definitely be a seller. I think that, I suppose it's possible that we have that drop, but if I had to pick, I would be a seller. It definitely could go down, but I would be a non-enthusiastic seller of such a thing if I were to do it.
He's not a fan in this case. I wouldn't say he's not a non-fan. He's just not a fan.
Exactly.
I get it. Yeah, it looks like 57 halves also going up today. That makes more sense. That is now a slightly in the money put. That was going up about 17,000 times today against an OI of just 2,400. So obviously a lot of opening put paper today, which makes sense. We're kind of whipsawing. We'll know how all this is going to shake out by tomorrow. I got to imagine 57 halves. If you had to gun to your head by one of those, Uncle Mike, you'd probably be more down for the 57 halves. They obviously have more of a chance of becoming a relevant option. I mean, blowing through 5,700, we've seen crazier things. We could easily do it. It's only about 44 handles away. That's a nothing move in the S&P right now. It's just kind of surprising that there's so much opening paper on that strike with a day to go. If you wanted some upside, 5,800s going up 13,000 times this week, also going out tomorrow. It's like people were bailing on those most of the week, though, including, actually, they're opening today, 5,000 trading today against an OI of 2,700. So we were kind of all over the place. I don't think we ever threatened. No, we got up to about 5,760 or so. So we never really threatened 5,800. So opening paper, are folks size overriding the 5,800s out there today? Looks like about 5,700 of the 58 quarters also going up today. So maybe we got some vertical action. But that was also opening. So a lot of opening paper with 1 day to go here in these near dated contracts. 5,800, 58 quarter. I got a feeling if you're trading that, you're probably selling that. It's an interesting spread, but we've seen weirder stuff. Let's go a little bit farther out if we can in the time we have remaining to see if we could find any paper with a little bit more meat on the bone, dare I say it. I know equities, it's all about the 1 day to go paper, listeners. How about 5,900s going away in 8 days? Those going up about 7,500 times this week. Interesting. That's about 100 handles and change out of the money. 5,000 of those going up today as well against an OI of 2,400. So we're kind of opening across the board here. 5,900s in 8 days. I don't know, Uncle Mike, you're a pretty bullish fellow. You think we're blowing through 5,900 in 8 days, sir?
No.
He is a non-fan of those, listeners.
That's one where I'd be a big fan of selling them as a covered call. Get long the futures contract, sell them as a covered call. I would like that. I'm kind of in similar positions on the equity side of it, to be honest. But as a buyer, I think that's a little bit aggressive for my taste.
A little bit aggressive for Uncle Mike. Listen, let's see if we can keep rolling, see if we find any other interesting and or aberrant prints. October 5,400 puts going up about 4,800 times this week, listeners. And those look like they were mostly opening on Tuesday and Wednesday. So that makes some sense. Some folks wanting to get a little bit of not quite tight, but decent protection to the downside out there. Puts not as cheap as they once were, but still decently cheap, all things considered. By the way, this put paper that's going up, people blasting away at nonsense puts. It is not just in the front week, listeners. There's 20,000 of the 4,700 puts going up in December, 10,000 of them in end of month December. It's someone out there has just discovered the magic of picking up pennies in front of the steamroller. 50 day to go November puts, they're selling those. 4,500 strike. I mean, we're kind of all over the place. We need to do a filter next time we do the S&P E-mini, listeners, and just to filter out all the nonsense puts. That would be fascinating to see how much actually relevant paper is going up out here. But still, just an active week, however you're going to put it, listeners. Any of these trades come across your radar, hit us up. Let us know. All right, that music means we've come to the end of another episode of TWIFO for this week. That's about all my voice can handle for today, listeners. But before we go, Mr. Uncle Mike, if folks want to engage with you on any of these products, where should they go? What should they do?
Well, if you're looking for a financial advisor who's not afraid of the word derivative, check out my website, stcharleswealth.com. Always happy to have a conversation with any of our listeners on any of the shows on this amazing network. Also, you can follow me on Twitter at Mike Tosaw, Tosaw.
Give the man a follow on Twitter. He's always putting up some cool webinars. If you want to do some education, Uncle Mike's got you covered there at Mike Tosaw. All one word on the old Twitter. And you know where to go to find these reports we've been referring to throughout the show. CMEgroup.com/TWIFO, TWIFO. That's the place to go to kick the tires and light the fires. That's going to do it for us on the network today. Back again tomorrow for a little bit of volatility views. That should be fun. Who's going to join us on that show? Well, you got to tune in to find out. Then we're off for the weekend. I can rest my voice, thankfully. Back again on Monday with Uncle Mike in tow for the option block, all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.